Before I start on the most frequently asked questions on income protection, let me preface this video by stating please seek, look for, grab advice before taking out an income protection policy, because there are some landmines that can blow you up with income protection. It's not as simple as mortgage protection or life insurance. With income protection, it's all about the claim. So make sure you're 100% sure that your claim will be paid before taking out a policy. Now, with that caveat in place, let's look at the top questions I receive on a regular basis on income protection, starting with number one: what's the difference between serious illness cover and income protection? Okay, serious illness cover is paid out as a one-time tax-free lump sum if you are unfortunate enough to get an illness as defined on your policy. So the important points are it's a one-time tax-free lump sum and the illness has to be defined on your policy. So it covers all the bad stuff: cancers, heart attack, stroke, but again, it has to be a cancer, heart attack, stroke as defined on your policy. If it falls outside your policy definitions, the insurer does not have to pay the claim. Okay, so compared to income protection pays out a regular income if you can't do your job due to any illness, sickness, disability, accident. So it's a regular income if you can't do your job due to any illness. So it's much more exhaustive than serious illness cover. There's not a prescribed list of conditions that you have to meet. It's any illness that stops you doing your job. So for that reason, we prefer to serious illness cover. Giving a quick example, if you were out of work due to stress or back pain, income protection would pay out, serious illness cover wouldn't. So you're missing out on two huge risks if you go for serious illness cover over income protection. Number two, how much income can I insure? Okay, let's look at self-employed people first because it's a bit simpler. Self-employed people can insure up to 75% of their income. They don't get illness benefit, so it's quite straightforward, 75% of your income. Just to note, for sole traders, it's 75% of your profits. It's not your drawings, it's 75% of your profits. Now on to normal Joe PAYE workers. They can insure, again, up to 75% of their income, but because they get illness benefit, the insurance company will reduce the payout by the illness benefit. So let's look at a simple, I hope, example. Let's say somebody earns €100,000. They can insure 75% of that, which is 75,000. You take away the illness benefit of 10,816, which leaves you 64,184. I hope. So look, the guts are €64,000. So you get €64,000 from the insurance provider, 11 grand from the illness benefit, which is a total of 75,000, which is 75% of your income. So between income protection and illness cover, you can replace 75% of your income. How much does income protection cost? Similar to mortgage protection and life insurance, you're looking at how much cover you need, the term or the duration of your cover, your health, your age, whether you smoke. They're the 5 factors that will affect the cost of mortgage protection, life insurance, or income protection. But with income protection, there are 2 more variables. There is the deferred period. Now, the deferred period is the amount of time you need to be unable to do your job before you can make a claim. So making it simple, if you choose a 4-week deferred period and you cannot do your job for over 4 weeks, you can make a claim. If you pick a 26-week deferred period and you can't do your job for over 26 weeks, you can make a claim. The shorter the deferred period, the higher your premium is going to be. In Ireland, average deferred period we see is between 13 and 26 weeks. And the second factor that's relevant for income protection is your occupation. So the insurers class your occupation according to class 1, class 2, class 3, class 4. Class 1 being the lowest risk, somebody who works at a desk like me. The worst that's going to happen to me is I staple a hand to my desk Hasn't happened yet, but it might do. Class 2 would be someone with slight manual work, maybe like a sales assistant who might be lifting boxes. Class 3, nurses and teachers, mainly because of claims history, as the insurers say. So there are quite a few claims in the nursing field and the teaching field, so they are a class 3, meaning the premiums are higher. And then class 4 is somebody who is 100% manual worker, like a plumber, carpenter. So that's how it works. Class 1 to 4, class 1 lowest risk, class 4 highest risk. High risk occupations pay more than low risk occupations. How does tax relief on income protection work? So again, this is different than serious illness cover. You don't get tax relief on serious illness cover, so it's another reason why we recommend income protection. You can get tax relief at your marginal rate. So if you're a 40% taxpayer, you can get tax relief at 40%. So again, making it simple, if your income protection premium is €100, claiming tax relief will reduce it to €60 if you are a higher rate taxpayer. It's pretty simple to do on my account at the end of the tax year. How long does income protection pay out for? Again, comparing it to serious illness cover, remember serious illness cover, one time tax-free lump sum. Once it's gone, it's gone. Income protection, on the other hand, will pay out until the ceasing age of your policy, assuming you can't do your job. So if you pick a ceasing age of age 65, you start your policy at age 30, the next day you're hit by a bus, you can't do your job again, the insurance company will pay out for 35 years. So you will get a replacement income for 35 years. That's how important this product is. Can you get income protection with a pre-existing condition? Good question and a common question. You can, of course, but the insurance company will exclude any pre-existing conditions. It's a bit like health insurance in that way. So let's say you had back surgery 2 years ago. The insurance company will offer you cover, but there will be a spinal exclusion on your policy. So if you're out of work in the future due to a spinal issue, the insurance company won't pay out because that's excluded from your policy. And the insurance company will get you to sign a statement saying that you understand that your back is excluded from all future claims. But if you are out due to any other illness, be it, who knows, MS, cancer, anything that stops you doing your job, you are covered. So you're not covered for the exclusion, but you are covered for everything else. Unfortunately, there are some conditions that income protection is not available. Neither is serious illness cover, to be fair. So if you have diabetes, if you have MS, neither serious illness cover nor income protection are possible. But look, this is probably for another video, but cancer cover is available, so we could look at that if you are looking for some other form of protection aside from life insurance. And that's it. They're the main questions were asked. As I said, there's a lot to income protection, so please go online, read blogs, speak to a financial advisor before you make a decision, because it's easy to get the piece of paper, but it's just trying to make the claim. That's where you need to be 100% sure that it will pay out. Hope that helps.